Hey everyone, and welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're getting into a big one, something that separates rookies from the pros. We're talking about economic indicators, what they are, how they move the Forex markets, and how you, as a beginner, can use or avoid them to trade smarter. If you're on a mission to learn Forex trading for beginners step by step, then this episode is for you. All right, let's break it down. No fluff, no confusion. Just the facts, strategies, and tools to make better trading decisions. Why economic news matters in Forex. Now, let's get this out of the way first. Forex trading isn't just about staring at charts or mastering candlestick patterns. It's about understanding the flow of money between countries and what drives that flow. You guessed it, economic news. When key economic indicators come out, like jobs data, inflation reports, or interest rate changes, they can send shockwaves through the market. Currencies spike, charts explode, and if you're not ready, your profits can disappear in seconds. That's why even solid Forex strategies for beginners can crumble if you ignore the news. Markets often price in expectations. So when economic data hits and surprises traders, good or bad, that's when you see the market really move. This is where news becomes not just noise, but a powerful trading signal. If you've ever asked yourself, how do I trade Forex news? You're about to find out. The three economic indicators every Forex beginner must know. Let's start with the three biggest, most market moving indicators you'll come across. If you only focus on these to begin with, you're already ahead of most beginners. Number one, non-farm payrolls, or NFP. This one drops on the first Friday of every month, and it tells us how many jobs were added or lost in the US, excluding farm workers, government employees, and a few other categories. Why is it such a big deal? Because it gives us a clear view of how strong or weak the US economy is. Strong job growth equals economic expansion equals potentially stronger US dollar. How does it impact the market? Huge volatility. And I mean huge. We're talking 50 to 100 pip swings within minutes, especially on USD pairs like Euro to US dollar, Pound sterling to US dollar, or US dollar to Japanese yen. Pro tip: unless you've got a solid news trading strategy that you've tested in a demo account, stay away for at least 30 minutes before and after the release. Beginners often get caught in the chaos and lose big. Even experienced traders tread carefully here. Some use straddle strategies or pending orders, but that takes precision. Next up, Consumer Price Index, or CPI. This one measures inflation. It tracks how much prices are rising or falling for everyday goods and services. Now here's why it matters. Central banks look at CPI when deciding whether to raise or lower interest rates. High CPI usually leads to rate hikes, and that strengthens the currency. Impact level: moderate to high. A big surprise in the numbers can send currencies trending for days. Pro tip: always compare actual versus forecasted data. That's what moves the market. And don't forget to watch core CPI, which excludes food and energy. It gives a more accurate trend, and central banks care about it more. Last but not least, interest rate decisions. This is the granddaddy of them all. Central banks, like the Federal Reserve, the European Central Bank, the Bank of England, they set rates to control inflation and economic growth. Higher interest rates equal stronger currency. Why? Because higher returns attract more foreign investment. But it's not just the rate number that matters. It's the tone of the central bank. Are they hawkish or dovish? Will they raise rates again soon? That's what traders really listen for. Impact level: off the charts, especially if the statement or press conference surprises the market. Tip: always watch the follow-up commentary. Sometimes the actual rate stays the same, but the language from the bank drives the big moves. Trading, or not trading around news. Here's the truth. Many new traders don't think about news at all. They just trade the chart. Big mistake. First rule: if you don't have a strategy for trading news spikes, just avoid them. Seriously, it's not worth the risk. News releases can cause spreads to widen, price to jump erratically, and stop losses to slip. Brokers know this. That's why spreads often explode during high impact news events. It's a no go zone for the unprepared. Second rule: trade trends that form after the news, not the spikes. Here's what I mean. Let's say the US releases a stronger than expected NFP report. The dollar spikes. Wait 15 to 30 minutes. If the move continues and lines up with technical indicators, then that's your window. Trade the trend, not the chaos. Use higher time frames to confirm. Follow market structure. You're not chasing, you're aligning. And always use risk management. Don't overleverage. Don't trade without a stop loss. Understand Forex leverage, how it works, because it can multiply your losses just as fast as it can multiply your profits. If you're new, use smaller position sizes or stick to demo trading during news events. There's no shame in learning safely. Know your calendar. Economic calendars are your best friend. Use platforms like Forex Factory. Highlight the red folder events. Know what's coming. Plan ahead. These calendars tell you what's being released, when, and which currency it affects. They even include forecasted numbers so you can anticipate surprises. Bonus tip: watch for overlapping news from different countries. That can cause unexpected correlations and confusion. When's the best time to trade in your region? Let's talk timing. Because news is released based on time zones, and if you're not aligned, you could miss the action or get caught off guard. If you're in North America, focus on the New York session, 8 a.m. to noon EST. Most U.S. economic news drops around 8:30 a.m. If you're in Europe, the London session from 3 a.m. to 11 a.m. Eastern Standard Time is your sweet spot. A lot of Eurozone and UK data gets released early. And if you're in Asia, the Tokyo session, 7 p.m. to 3 a.m. Eastern Standard Time, is where Japanese and Australian data comes out. Now here's a golden nugget. The London-New York overlap, from 8 a.m. to 12 p.m. Eastern Standard Time, is the most active and volatile time. Liquidity is high. Opportunities are everywhere. That's prime time. Forex podcast equals learning on the go. If you're trying to squeeze in learning during your commute or workout, I highly recommend checking out a Forex podcast. A personal favorite of mine is the Crystal Ball Markets Forex podcast. They cover beginner-friendly topics like trading psychology, news analysis, and pro interviews. It's a solid way to build your market intuition without being stuck to a screen. Best beginner-friendly Forex platform? Try crystalballmarkets.com. If you're overwhelmed with platforms and don't know where to start, I've got one for you. crystalballmarkets.com. It's clean. It's simple. It has real-time news feeds built in, low spreads, and demo accounts you can practice with. Plus, they've got support and educational content that's actually made for beginners. If you're serious about learning currency trading explained without the noise, this platform is worth checking out. Open a practice account. Get used to the tools. Then go live with confidence. Final thoughts: respect the news, respect the market. Let me leave you with this. Every time a major report drops, whether it's CPI, NFP, or a rate hike, it's like tossing a stone in a calm pond. The ripples reach every corner of the Forex market. If you're ignoring the news, you're ignoring the biggest driver of price action. Want to master Forex trading for beginners step by step? It's not just about reading charts. It's about knowing what moves the charts, and that's economic news. So here's the plan ahead. Understand the data. Use smart Forex risk management. And if you're ever unsure, don't trade. No trade is better than a reckless trade. Stay informed. Stay disciplined. And most of all, keep learning. That's your real trading edge. All right, traders, that's it for today's episode. I'm Sophia, and this is Financial Market Insights for Traders. Catch you in the next one. And remember, trade smart, not blind.